I'm going to show you how the US and China sprinted from shock to de-escalation in just weeks. Start with the spike. On April 10, 2025, the White House pushed tariffs on China as high as 145%. China hit back with 34% on US goods the same day. Markets tanked. One drop was the worst for US stocks since 2020. Then, a pivot. With cargo traffic collapsing. Flexport says ships from China to the US fell 60% in April, and forecasts of imports plunging, the pressure got real. JP Morgan flagged an as much as 80% slide in Chinese imports to the US later this year, and the National Retail Federation warned US imports could drop at least 20% in the second half. So both sides talked. Treasury Secretary Bessent and US Trade Representative Jameson Greer met Chinese officials in Geneva. The first in-person meeting since the tit-for-tat blew up in March. It wasn't a grand bargain, more like a first step to de-escalate. Wall Street liked it. Markets popped on the headlines. The big swing came May 12th. Washington and Beijing agreed to a 90-day suspension and reduction of the emergency hikes, rolling back roughly 115% on each side, leaving a 10% base tariff in place. That reset gave businesses breathing room and lifted sentiment. Here's why it mattered. Factories on both sides got slammed, supply chains seized, and investors froze. Major outlets tracked the whipsaw. Wall Street Journal, CNN Business, Kiplinger, showing panic on escalation, relief on talks, and optimism on rollback. But the story isn't over. Courts have questioned the president's emergency tariff authority. Appeals judges called those IEEPA tariffs illegal. The Supreme Court hears arguments November 5th. And while tariffs are way down and a reset is in motion, enforcement, tech access, long-term rules. So are we out of the woods? Not yet. The next 90 days will decide if this truce becomes a deal or just a timeout.